Okay, we are going through the first session of financial management. So it's 3 hours closed book exam that you should come to campus. And you can just bring pen and calculator. And there is no any other way, and it covers 100% of your oral marks. So in level 4, you have gone through different financial statements like a statement of financial position, income statement, and cash flow statement. Also, you have been through budgetary variance analysis, which also we will use it in our in financial management. What are the 5 functions of corporate management? Planning, organizing, staffing, directing, and control. What is the planning? It deals with the chalking out the future course of action, deciding and advance the most appropriate course of actions. A plan is a future course of actions. It is an exercise in problem solving and decision making. Maybe it can be short, medium, or long term. It involves the creation of strategy through goal identification and pathway analysis. After we move to organizing, the process of bringing together all physical, financial, and human resources and developing productive relationship among them for achievement of organizational goals. After that, staffing. The function of staffing the organization and keeping it resourced. Staffing has assumed greater importance in the recent years due to advancement of technology, increase in size of business, complexity of human behavior, etc. Directing. That part of managerial function which actuates the organizational methods to work efficiently for achievement of organizational purposes. It can be like supervision, implies overseeing the work of subordinates by their supervisors, by their superiors. Motivation means inspiring, stimulating, or encouraging the subordinates. Leadership may be defined as a process by which manager guides and influences the work of subordinates in desired direction. Controlling, measure of accomplishment against organizational goals. Corporate governance is a set of processes, policies, customs, laws, and institutions which affect the way in which a company is directed, administered, and controlled. Key principle of corporate governance: right of shareholders, interests of other stakeholders, integrity and ethical behavior, disclosure, transparency. What are the issues in corporate governance? Conflicts of interest between different stakeholders. No fixed external policies for effective corporate governance. Concentration on punishing criminality and liability without legislating for good practices. Review of last lecture. Accounting conventions, financial statements, financial management, corporate governance. Accounting, as we know, we have financial accounting, management accounting. One of the key business operation equation, revenue minus cost is equal to profit. Financial accounting, mainly is focused on what has happened in previous years, previous period. And management accounting is based on planning, control of present and future events. Financial accounting concerns only external stakeholders and regulatory authorities. Management accounting is less stringent and less regulated than financial accounting. Strategic planning is essential in terms of company-wide agreement at primary level, translated and communicated as operational level goals, objectives, and expectations. Goals must be measurable with clear performance pathways, and robust audit and risk identifications. Built or created around profitability may focus on subsidiary objectives designed to achieve maximum profit. In general, strategy feeds on information which are both relating to past performance and current performance. Corporate financial strategy two key terms when reviewing progress against objectives: actual performance against budget one. And one way that we are going to measure it is based on budgetary variance analysis. Budgeting in general may focus on whole or part of the organization, or it can be focused just only on individual or operation or multiple stage system. May focus on cost or revenue or both of them at the same time, include provision, reserves, and risk management factor considerations.